Students, how are you all? I hope you have watched the previous two videos on hire purchase system. In this video, we discuss the accounting for hire purchase transactions. Before discussing, there is a small correction with regards to the Hire Purchase Act 1972. In the first video, I said there is a separate act for hire purchase transactions, that is the Hire Purchase Act 1972. Actually, this act was rescinded in the year 1973 itself. Rescinded means cancelled. This act is cancelled. That means there is no separate act for this hire purchase system. Please make this small correction. Now we go to accounting for hire purchase transactions. First, the we may record the entries in the books of purchaser, hire purchaser, and at the same time in the books of hire vendor. First we see in the books of hire purchaser. Look at first we see the accounting treatment in the books of hire purchaser. Actually, for this hire purchase, what is the first transaction? That means we entered into an agreement with the hire vendor to purchase the asset on hire basis. So that is the first and foremost transaction. Now, based on this transaction or on the basis of this transaction, there are several subsequent transactions. Now we see the sequence of transactions first. The first and foremost transaction is entering into an agreement with the hire vendor for purchase the asset. This is the first transaction. Now, when we entered into hire purchase agreement and we are buying the asset, so asset comes in debit, asset account to debit to hire vendor account, because we are not paying full cash to him, so that we should pay amount to him. So what is the entry? Asset account to debit to hire vendor account. At what price? Cash price. You should record the entry at cash price. Next, the second transaction is making down payment. Making down payment. Under hire purchase system, this down payment is important. Even though we are entering into hire purchase agreement, but initially you should pay some down payment, at least some down payment. I hope you may face this situation when you are buying two-wheeler or four-wheeler. Compulsorily you should pay some amount as down payment. The same amount we should pay now. Now, who is the receiver of this down payment? Hire vendor. So, receiver account to debit, hire vendor account to debit. What we are paying? Cash or bank? Most probably bank account is credit. So, this entry is recorded at what amount? Amount down payment amount. Next transaction, look at when installment becomes due. Generally, under hire purchase, the remaining amount we pay in various installments. Okay, so when installment is due, installment amount includes what? Principal amount plus interest amount. So interest amount is treated as finance charge for us, so it is expense for us. So now first record the entry for interest amount due. Interest is expense for us, so interest account debit. To whom this interest amount is payable? To hire vendor, so that hire vendor account credit. So finally, what is the entry for this interest? Tell me. Interest account debit to hire vendor account. So interest is calculated always on what? Outstanding amount of loan. Do remember. Next we calculate this interest portion, all those things. Okay, don't worry. Next. Now, after recording the interest amount due, now record the entry for installment amount due. Pay the installment now. To whom this installment amount is paid? To hire vendor, so that hire vendor account debit to bank account. Now, installment amount includes principal amount plus interest. Don't forget. So, amount of installment which includes principal plus interest portion. Now, look at it. At the end of the year, we should calculate depreciation on the asset. You may ask one doubt here. Sir, as this is hire purchase agreement, only possession of goods is transferred. but legal ownership is not transferred by the hire vendor. To claim the depreciation, actually depreciation is claimed by whom? Owner of the asset. But here you may ask, sir, we are not the owner of asset, but how we claim the depreciation on this hire purchase asset? For that, you should refer AS 19. AS 19, lease, accounting for lease transactions. Understood everybody? What is the entry for depreciation? Tell me. Depreciation account debit to asset account. In the CA foundation level, we have seen the accounting for depreciation. So according to that concept, we do the accounting treatment practically. But here, just it is enough to write this entry. You need not do that provision for depreciation. All those things you need not to follow in this concept, but practically you will follow them. Okay. But here, just it is enough to write depreciation account debit to asset account. Clear everybody? So depreciation is always calculated on what amount? Cash price. Don't forget. Depreciation is always calculated on cash price, right? Next, at the end of the year, if you observe here, there are two things. One is interest, another one is depreciation. These two, at the end of the year, we transfer to profit and loss account. So transfer these two to the profit and loss account. So for closing interest and depreciation accounts at the end of the year, so transfer to the P&L account. So P&L account to debit to interest account to depreciation account. These are closing entries. In the CA foundation level, final accounts of sole proprietor, we understood the closing entries concept, the same entry here. Clear? So these are the 5 entries we should record in the first year. In the first year in which the asset is purchased. From the second year onwards, except this first and second transaction, third one, fourth one, fifth one, we should follow till the completion of hire purchase agreement. Here the same transactions are repeated in the next years also. Do remember, students. Now if you follow the above entries to record the hire purchase transactions, then this method is called cash price method. Do remember. Actually we have two methods. Sir, ముందే చెప్పొచ్చు కదా సార్, ఫస్టే ఎందుకు చెప్పలేదు 2 methods ఉంటాయి అని? ఫస్టే మనం చెప్పేసుకుంటే ఎలా? So we should understand first what is the accounting treatment. Actually this method we should follow, but alternatively, this is the basic method. Alternatively, we have another method also. You may follow either first method or second method, but this is the basic method. So this method name is what? Cash price method. We have another method also, that is interest suspense method. Regarding the second method, we'll discuss later. Do remember. So if you record the above 5 entries, this method we are calling it as cash price method. Do remember, students. Next, if you observe here, entries we observed. To record the entries, first we need date of transaction. After that, entry. Yes, transaction we have, entries also we have. Next, amounts under hire purchase. In this hire purchase chapter, calculation of amounts plays important role. Entries easy, if you remember, you can remember these entries, but what about the amounts? The calculation of amounts plays important role in hire purchase chapter. Okay, now look at, to record the first entry, you need which price? Cash price. You need which price? Cash price. Understood? Yes. Now to record the second entry, what you need? You need down payment. Look at, you need down payment. Now third, here interest. That means you need only interest here. So different amounts we have. First transaction, cash amount, it is different. Second transaction, down payment, it is different. Third transaction, interest, it is different. Fourth transaction, installment, which includes principal and interest. Fifth transaction, depreciation anyway we'll calculate. Fourth one, okay. And fifth one is nothing but this entry we may record from third and fourth. Okay, that means to record the entries we need different amounts. Now we see how to calculate these different amounts. Look at now, this we'll discuss later how to present in balance sheet. Now come to this cash price. What is the meaning of cash price? See, it is the amount to be paid by the buyer for cash purchase. Instead of purchasing the asset on hire basis, if you buy the asset for full cash, by paying full cash, then what is the amount you have to pay? That is nothing but cash price of the asset. This you should calculate. Next, down payment. Down payment is nothing but what? It is the amount payable by the buyer at the time of agreement. Without down payment, it is not possible to enter into hire purchase agreement. At least you have to pay some amount as down payment. Okay. Interest is nothing but what? It is the extra amount which the buyer pays for not paying the full amount at the time of agreement. Do remember, actually if you pay cash price, fine, no need to pay any extra amount, but you are not paying the total amount at the time of agreement. For that purpose you should pay some extra amount. This extra amount is called interest portion, and technically we call it as finance charge. In this hire purchase system, this interest calculation plays an important role. Interest calculation as well as cash price calculation, these two calculations are very important. Next one, installments. Installment is nothing but what? This is the amount which the buyer pays periodically. To put it simple, it is periodic payment paid by the hire purchaser to the hire vendor. This installment includes principal portion plus interest portion. I hope you understood these four terminology first, because these terminology is important: cash price, down payment, interest, installment. Okay students, now come to this concept, hire purchase price. Cash price means what? If you buy the asset by paying full amount, then it is cash price. But you are not paying full cash, you are paying the amount in installments. So this installment includes interest. So hire purchase price means cash price plus the interest which you are paying extra. These two components constitute hire purchase price. Okay, and another formula for a hire purchase price is equal to down payment. At the time of entering into an agreement, you will pay some amount as down payment plus all installment amounts. So this is another formula for hire purchase price. Try to understand these formulas. Okay. Next, interest. Interest is always calculated. You know how to calculate interest. Interest is always calculated on principal amount outstanding into rate by 100. This is how we calculate interest. But this is simple formula, but practically, that means in the examination problems, for calculation of interest you should follow some procedure. Okay, but practical situations you can calculate this interest. In the first video, in the second video, I have shown you how to calculate interest by preparing amortization schedule. Okay, so you can please watch the lecture 2 on hire purchase. Clear everybody? Right. Now come to installment amount. So in this installment amount may be fixed amount of installment. There are two types of installments. One is fixed amount of installment. Another one is variable amount of installment. That means what, sir? EMI. To put it simple, it is called EMI. Equated monthly installment. Let us assume the EMI is 10,000 per month. So every month I pay 10,000 rupees installment amount. So this installment amount fixed. So this 10,000 consists of principal amount and interest amount. But this principal amount and interest amount varies every month. Every month principal amount, interest amount changes. But this 10,000 will not change. This 10,000 will not change. This 10,000 contains what? Contains two components. One is principal component and another one is interest component. This principal amount, interest amount may change, but this 10,000 will not change. And here this is unequal amounts. Let us assume first installment I paid 10,000. Second installment I may pay 9,000. Third installment I may pay 7,000. What is happening here? The amount of installment is changing, installment to installment. So try to understand this concept. Okay, fixed amount of installment, variable amount of installment. Now come to calculation of interest amount. See, generally in the practical situations, originally how interest is calculated. Actually, you need not to calculate any interest. When you enter into an hire purchase agreement, the hire vendor gives you the repayment schedule. So that repayment schedule contains all the details. Otherwise, if hire vendor fails to provide this repayment schedule, you may calculate or you may prepare this repayment schedule in the MS Excel sheet. Okay, now that we discussed in the previous video. But in the examination problems, they will not give you these ready-made tables. Okay, in the examination problems, to give the accounting treatment in the books of hire purchaser, you need basically two important amounts. One is cash price, another one is interest amount. These two are very important. To calculate these two amounts, the examination problems contains different information. These two factors we calculate based on the information given in the problem. Suppose I need to calculate interest. For calculation of interest, you need basically two things. One, loan amount outstanding into rate of interest. If you know these two factors, then you can calculate interest portion. Suppose they are not giving this information. This is direct information. But in the examination problems, don't expect a direct information. In the examination problems, they always give you indirect information. So when you get indirect information to calculate these things, how do you calculate? That is the question comes. For that, we have different scenarios. Once you can understand these scenarios, whatever the way you get the problem, you can calculate easily. Do remember, hire purchase problems, recording entries are easy, but calculating the amounts are difficult. Difficult means it logical thing. Okay, now look at first situation, case 1. This is very basic case. When cash price is given, next installment amount also given. That means every installment how much amount you have to pay, that is also given, and rate of interest also given. Cash price given. With this cash price, you can record first entry. What is that? Purchase of asset account debit to hire vendor account. Cash price given, so you can write the entry. Next, installment amount. Sir, what about down payment, sir? Don't worry, down payment is always given in the problem itself. Whatever the scenario or case it is, down payment is always given in the problem itself. Okay, you need not to calculate down payment separately. Hope you understood. Right, with this cash price you can write the first entry. With the down payment given in the problem, you can write the second entry. But what about under third entry, A point, interest amount due? You can write the entry, but where is the amount? Here interest amount is not given, rate of interest is given. Understood? Now 3b, third transaction, B point. What is 3b? Look at installment amount. Yeah, installment amount. This installment amount they have given in the problem itself, so that you can write the entry. Fine, everybody. And this depreciation is also you can record, because depreciation is calculated on cash price. So cash price given in the problem itself, so you can write the entry. Now last one, this also you can write, but except interest portion. That means when you get cash price, installment amount, and rate of interest, you can record all the entries. With the exception of interest entry. Suppose if you don't know how to calculate interest, at least you try to record these entries without fail, because in the accounts we have stepwise marking, so that except interest you can write all the remaining entries. Remember, try to understand, students. Okay, right. Now so here, how to calculate interest? That is the problem. To calculate interest, you should follow some format. You should prepare some format. What is that format? Look at first one. Installment date. What is the installment date? Second column. Opening balance of loan amount. What is the outstanding balance of loan amount? Third column. Installment amount. Installment amounts you already they have given in the problem. Okay, next, principal amount in each installment. This you should calculate, and main calculation is our interest calculation. This also you should calculate. And last one, sixth one, closing balance of loan amount after installment. If you observe this format, it is nothing but the Excel sheet format. In the previous video, we have prepared one format in the Excel sheet. That format and this format, both are same. Try to understand. Okay, now to understand this concept, we see one problem. Look at one problem. Look at example. X purchases a car on hire purchase system on what date? 1/1/2022. X purchased a car on 1/1/2022. The total cash price. See, cash price is given. What is the total cash price? 4,50,000. This is the total cash price. With this, you can write first entry. Yes. Next, payable 90,000 down payment. 90,000 down payment and 3 installments of 1,70,000. Total how many installments? 3. Each installment 1,70,000. First installment, second installment, third installment. Now you people tell me, is this installment amount equal or unequal? We understood this concept. Installment amount, fixed amount of installment, variable amount of installment. Now you people tell me, in this example, is the installment amount equal or unequal? Unequal. First installment 1,70,000, second installment 1,50,000, third installment 1,08,460. Do remember, installment amount includes interest portion. Don't forget. Now payable at the end of first, second, and third years. So in the previous video, we understood installment amount may be paid monthly, quarterly, half-yearly, yearly. Now here, yearly installments. Okay. Interest rate is 10% per annum. How much interest hire vendor is charging? 10% per annum. Okay. Now what is the requirement? You are required to calculate interest paid by the buyer to the seller. Okay. So what is the format we should follow? Look at above format only. Now tell me, first installment will take 1/1/2022. This is the date on which we purchased the asset. On that date, actually what is the total amount payable? 4,90,000. How much amount you are paying? Down payment 90,000. Down payment is only towards what? Principal. In the down payment, do remember, in the down payment there is no interest amount. Okay. Now 4,50,000 is the opening outstanding amount. 90,000 you paid down payment. So what is the remaining amount payable? 3,60,000. Or you can ignore this first one also, no problem. So 4,50,000 cash price minus installment amount 90,000. What's the remaining amount payable? 3,60,000. Yes or no? Yes. Just a minute. Let me check. Yes, 3,60,000. Now, what is the next installment date? 30 yearly installments only. So 31/12/2022. Before making first installment, before paying first installment, what is the amount outstanding? Tell me. 3,60,000. Okay. What is the installment amount? 1,70,000. What is the installment amount? 1,70,000. Look at in the problem. 1,70,000 is the first installment. Now you people tell me, installment means principal amount plus interest amount. Yes or no? Now we should divide this 1,70,000 into principal and interest. Now tell me, first we calculate interest. Interest is always calculated on what amount? Outstanding amount. Before making payment of this installment, what is the amount outstanding? 3,60,000. So 3,60,000 into, what is the rate of interest? Tell me. 10%. Per annum only? Yes. So what is the interest portion? 36,000. Out of the installment, 36,000 is towards interest. So automatically, what about the principal amount? 1,34,000. 1,34,000. Now, what is the closing balance? Look at what is the loan amount actually outstanding. Loan amount 3,60,000. 3,60,000. Out of 3,60,000, you are paying 1,34,000. 1,34,000. What is the remaining amount outstanding? 2,26,000. 2,26,000. 2,26,000 will become opening balance. That means outstanding balance as on 31/12/2023. Okay. Now, what is the second installment that we are paying? 1,50,000 rupees. Now, this 1,50,000 rupees consists of principal portion and interest portion. Now look at it. So out of 1 lakh, first calculate interest portion. Interest is always calculated on outstanding amount. So 2,26,000 into 10%. That comes around 22,600. So out of 1,50,000, how much interest? 22,600. Okay. Now 1,27,400 is towards principal amount. What is the amount outstanding? Tell me. 2,26,000 is the beginning outstanding at the beginning minus 127,400 we paid principal amount. What is the remaining outstanding amount? 98,600. This will become opening balance as on 31/12/2024. Okay. Now, what is the installment amount we are paying? 1,08,000. Look at 1,08,460. Okay, 1,08,460 we are paying. This is installment. Installment includes principal and interest. Calculate interest. 98,600 into 10%. It comes 9,860. Okay. Out of 1,08,460, we are paying 9,860. The remaining portion is towards principal amount. Now outstanding will become 0. Okay. Yeah, this is the calculation. Now based on this table, you can start recording the entries. Now look at here. What is the total interest that we have paid? Calculate. 36,000 plus 22,600 plus 9,860. It comes around 68,460 is interest. Now tell me hire purchase price. higher purchase price is equal to, just a minute, yeah, here we can write higher purchase price is equal to, what's the formula for higher purchase? Cash price plus interest. Okay, cash price is how much? 4,50,000 plus interest paid is how much? 68,460. 68,460. How much? 5,18,460. This is our higher purchase price. What is the another formula for higher purchase? Tell me. Higher purchase price is equal to down payment. How much down payment? 90,000 plus all installments. Tell me all installments. First installment 1,70,000. Second installment 1,50,000. Third installment 1,08,600. Is it or not? 1,08,460. 1,08,460. Okay. Calculate it. 90,000 plus 1,70,000 plus 1,50,000 plus 1,08,460. It comes around 5,18,460. So both formulas will work out for us. So in this manner, we calculate interest. In this, see, by preparing the whole table, what you have calculated? Interest portion only. Our main aim of preparing this table is to calculate interest portion. Why should we calculate interest portion separately? Because interest is finance charge that should be treated separately. So this is how we calculate interest under first method. First case is what? Cash price given, installment amount given, and rate of interest also given. Okay, now second method or second case is what? Look at second case. I hope you understood this. Okay, fine. Now come to second case. What is the second case? Look at, when installment amount and rate of interest are given, but cash price is not given. Oh my god. Installment amount given, rate of interest given, but cash price not given. Now look at. If cash price is not given, is it possible to record the first entry? Entry we can write. What about the amount? No. Okay, fine. Second entry, down payment. Down payment anyway, they will give you in the examination problem. Okay, fine. Second entry you can write. Complete entry you can write. Third entry, interest amount due. So we should calculate interest because interest directly they have not given. Now installment entry. As installment amount is given, so you can write installment entry. Now come to depreciation entry. Depreciation is calculated on cash price. Is cash price given? No. So that it is not possible to write depreciation entry. Last one, transfer of interest and depreciation to P&L account. As we have not calculated interest portion, depreciation portion, it is not possible to complete this entry. So because of not giving this cash price, we are unable to record the first entry. We are unable to calculate depreciation. So incomplete entry you can write. What about amounts? Think once. So in this hire purchase, students face this difficulty only, calculation of interest difficulty only. Understood, students? So I hope after watching this video, all your doubts gets clarified. Okay, now look at, in this situation here two amounts are missing. What are those two amounts? Cash price is missing as well as interest portion is also missing. Like look at above table. In this table, cash price is missing. That means cash price is missing means the second column. We don't have the information of second column. Third column information we have. When you get the third column information, second column information and third column information, then only you can calculate fourth, fifth, sixth columns. Yes or no? Yes. But to calculate interest, now you tell me, to calculate interest we need outstanding balance. But outstanding balance column, no details. So how do we calculate? Now we should calculate the same format in reverse manner. Because opening outstanding in the first installment, what is the amount outstanding? That we don't know. This also we don't know. This also we don't know. This also we don't know. Yes or no? All the amounts, outstanding amounts, we don't know. Then how do you calculate? That is the question mark. Think and tell me. What I am saying is, we calculate these things by reversing this table. Reversing this table means this will become first one, this will become second one, this will become third one, this will become fourth one. Sir, what are you saying, sir? How is it possible? Simple. Look at it. We don't know this amount. Yes or no? Okay, fine. But if you observe the last installment, contains what? This amount and interest amount. Yes or no? Last installment contains what? This principal amount which is outstanding, entire principal amount which is outstanding at the end of fourth year, plus interest portion. That means this 1,08,460 rupees consists of principal amount as well as interest amount. So if you divide this amount into principal and interest, then you can calculate this one. You can calculate 98,600. Once you can calculate 98,600, then it is easily to calculate next one. So the same table, but we are calculating in reverse manner. Now you can ask one thing, sir, this 1,08,460, generally interest is calculated on what amount? Outstanding amount. But outstanding amount we don't know. But we know only one thing: installment includes interest. If you can identify how much interest is included in the installment, then we can segregate principal portion and interest portion. Now we work it on this concept. Okay, now look at everybody. For this we should follow this format. Before understanding the format, look at. See, one small concept here. What is that concept? Generally, interest is calculated on principal amount into rate by 100. Interest is calculated on principal amount into rate by 100. Yes or no? Do you know the principal amount? We don't know. Okay, right. Now installment amount, but we have another formula. Installment amount is equal to principal amount into interest. Yes or no? Installment amount is equal to principal amount plus interest. Now take principal amount. So principal amount is equal to installment amount. I am sending this interest to left hand side. Is it clear? So principal amount is equal to installment amount minus interest. Hope you are understanding. Right? Now substitute this principal amount in the formula. To understand, students, it is very interesting. Okay, now look at it. So interest is equal to same formula, first formula. Interest is equal to, instead of principal amount, we are substituting installment amount minus interest. Okay, rate by 100 is common. Now send this rate by 100 to the left hand side, LHS side. Okay, so reverse automatically. Interest into 100 by rate is equal to installment amount minus interest. Fine. Now send this interest now. Send this interest to the left hand side. So interest plus, okay, here we can write one more step. What is that? Yeah, same step, no? Right. Interest minus symbol when it comes to LHS, plus symbol. Interest plus the same thing. Interest into 100 by rate is equal to installment amount. Just we are solving the equation, right? Now, so here take the interest common factor, take the interest common, so 1 plus 100 by rate is equal to installment amount. Now take the LCM, rate is the LCM, rate plus 100 by rate is equal to installment amount. Now send the whole thing in the bracket to the right hand side, automatically it gets reversed. So interest is equal to installment amount into rate by 100 plus rate. So to calculate, try to understand students, to calculate interest portion in the installment amount, what is the formula we are following? So interest is equal to installment amount. Take the installment amount into rate of interest is given. So rate of interest divided by 100 plus rate. Normally, what is the formula to calculate interest? Interest is equal to principal amount into rate by 100. But here the formula is different. Look at it. Interest is equal to installment amount into rate by 100 plus rate. How do we get this formula? Based on the above concept. I hope you understood this concept. If you want, you can listen it again, but this is very important. See, to remember directly this formula, okay, just you apply this formula, okay, fine. But how we got this formula, that is important. Clear, everybody? Right. Now we'll take one example to understand this concept. Look at example 2. X purchased a machinery. This time we are purchasing a machinery, okay, machinery on hire purchase system, okay, right. As per terms, he is required to pay rupees 30,000 as down payment. See, down payment is always given in the problem, don't worry. And 40,000 rupees at the end of first year, 30,000 rupees at the end of second year, and it is 50,000, sorry, it is 50,000 at the end of third year. So here what is the information they are giving? Installments they are giving. Rate of interest. See, rate of interest 12% per annum. Rate of interest they are giving and down payment they are giving. So what is the information missing here? Cash price missing and interest amount missing. Now we should calculate both. So start with, here you should follow some procedure. Take the same format. Here, okay, solution to example 2, take the same format. First, take the last installment. Last installment means only third installment only, right? Third installment. Start with third installment. What is the third installment amount? 50,000. What is the third installment amount? 50,000. Look at once. Yeah, 50,000, 30,000, 40,000. Fine. 50,000. Okay. Now this installment includes interest, so deduct that interest. Now tell me how much interest is included. We have calculated we found one formula, installment into rate by 100 plus rate, so 112. I hope you understood this. Very important, students. 50,000 into 12 by 112. How much? 5357 deduct. So this 50,000 includes 5357 interest. 5357 interest. So automatically 5357 automatically 44,643 rupees is what? Principal amount. So principal amount is 44,643. 44,643 is what? Balance of cash price. Yes or no? This is the cash price included in the third installment. To this, simply add second installment. What is the second installment? 30,000. What is the second installment? 30,000. Now, what is the total amount here? 74,000 643. Before making second installment, including interest, what may be the amount outstanding? 74,643. Now, deduct interest. Installment amount 74,643 into rate by 100 plus rate. Do calculate. Where is my calculator? Yeah. 74,643 into 12 by 112. This is something interesting, students. 7997. Okay. So 7997 is the interest portion. Okay. Out of 74,643, deduct 7997. So what is the principal amount? 66. No, just a minute. This is installment amount is 30,000 minus 7. Out of that, 7997 is the principal portion. That means 22,003 is the principal amount in second installment, right? So deduct now. So 74,643 minus 7997, 66,646. This is balance of cash price. Balance of cash price. Okay, to this add first installment. To this add first installment. What is the first installment? 40,000. 40,000. So total will become 1,06,646. Okay, 1,06,646. So from this you deduct interest. So installment into 12 by 112. Okay, calculate. 106,646 into 12 by 112. How much? 11,426 rupees. Okay, so 11,426. Right, interest portion is 11,426. So out of first installment of 40,000, towards interest is 11,426. So what is the principal amount in first installment? 28,574. Okay, now deduct here 1,06,646 minus 11,426. So 95,220. So to this add down payment. Add down payment. How much down payment we paid? 30,000 rupees down payment. 30,000. Add 30,000. Now tell me, plus 30,000. 1,25,220 is the cash price. 1,25,220 is the cash price. So here you can write 30,000. Okay. Now last column, if you calculate last column also, how much you will get? 125,220. And total interest column, look at this last column, you can calculate 44,643 plus 22,003 plus 28,574 plus 30,000. Same 125,220. Interest calculate 5357 plus 7,997 plus 11,426. What is the total interest here? 24,780. Look at, this is how we calculate interest and cash price in the problem. See, from third installment we are calculating reverse calculation. This is called reverse calculation. Now you may ask one doubt. Now look at, what is the total cash price here? Now you can take these amounts, 1,28,220 cash price. Now cash price is, we have cash price 125,220 and installment amounts also there and the rate of interest also there. You follow the first method with the same information. You follow first method, you will get the same thing. Okay, try to understand a thin line difference between first case and second case, students. Okay, right. So these are the two methods, two cases in which we calculate interest. First case, interest, only interest calculated. Second case, interest and cash price also calculated. Clear? Now look at it. Yeah, this is another case. This is another case. This is what? Same case 2. Case 2 is what? Installment given, installment amount given, and rate of interest given, but interest amount to cash price they have not given. So here instead of following this format, this may get some confusions for us. Okay, instead of following this format, okay, here you can take annuity table. You can take annuity table, annuity factor. That means all future installments, bring it to the present value. Anyway, down payment we have, all future installments, bring it to the present value. Down payment plus present value of all installments will give you automatically cash price. So under this system, under this case, cash price is nothing but what? Down payment. In our example, 30,000 is the down payment plus present value of future installments. So first installment how much? 40,000. Present value how much? Second installment how much? 30,000. Present value how much? Third installment is how much? 50,000. What is the present value? So bring all future installments into present value, automatically you will get the cash price. If you follow this method, you will get the cash price. But what about interest? To calculate interest, you should follow case 1 again. If you calculate cash price under this method, I repeat, if you calculate cash price under this method, again you should follow case 2 to calculate what? Interest. To calculate what? Interest. Here two factors we need. One is interest, another one is cash price. If you follow this one, this is called without annuity table. This is called without annuity table. Our example 2 is without annuity table. If you follow without annuity table, here you are able to calculate two things. One is installment as well as cash price. But for the same example, if you apply annuity table, you can calculate only cash price. After calculating cash price, again you have to do calculation which is done in case 1. Hope you understood, students. No confusions here, no confusions. I believe in one thing: if you have clarity, then there is no scope for confusion. If you are having confusion, means then in that case there is no clarity in the concept. It is not possible to get clarity in one attempt. So read twice, thrice, possible 5 times, 10 times. If any, see, some concepts we can understand in first attempt, but some concepts requires little bit logical thinking, and you have to put 100% your mind here. Okay, I repeat once again. Case 3 is nothing but what? Case 2 only. Okay, but case 3 we are following annuity table. Case 2 no annuity table. Annuity table means bringing future installments into present value. That's it. By doing this, you can calculate only cash price. What is the formula for cash price? Down payment plus present value of all installments. Okay, fine. Now after calculating cash price, again you should follow the procedure which we have done in case 1. Why? For what purpose? For calculation of interest. Okay, now second note point. This case is similar to case 2, but here we are taking reference of annuity table. That's it. So this is our case 3. Okay, so different situations, different scenarios, but practically you will not face this much of difficulty, only from problematic point of view. Now we'll take one example. What is the format here? Format for calculating cash price, simple. Only cash price, do remember, we are not calculating interest. Okay, number of installment, installment amount, and present value factor at given interest rate, present value of each installment. We'll take first installment, 31st first year. We'll take first year, second year, third year. We'll take second example base for this problem. Okay, what is the installment amount? 30,000, 40,000, 30,000 and 50,000. Okay, present value factor at given interest rate. What is the interest rate here? 12%. Interest rate here 12% per annum. Okay, now calculate. Take your calculators. See, what is the formula here? Present value factor is equal to 1 by 1 plus r whole power n. Okay, now first year 1 by 1 plus r means rate of interest, so 0.12. second year 1 by 1 plus 0.12 whole square. Okay, third year, I hope in the time value of money concept in your financial management subject you have time value of money, the same formulas we are using here. Third year 1 by 1 plus 0.12 whole power 3. That is 3. Okay, fine. Now take out your calculators and calculate. Look at the same will follow here. Take out your calculators. 1 by 1.12, 1 by 1.12 and is equal to how much we are getting? 0.893. round it off. Okay, again simply press equal to 0.797. again simply press equal to 0.711. okay, clear? Now multiply. 40,000 rupees is the future value after 1 year. 40,000 is the future value after 1 year. Bring it to the present value. That is 40,000 into 0.893. Just a minute. 40,000 into 0.893. How much? 35,720. What is the meaning of this? 35,720 today will become 40,000 after 1 year. After 1 year at the rate of 12% interest. Okay, next second one 30,000 rupees into 0.797 is equal to 23,910. What is the meaning of this? 23,910 rupees today will become 30,000 rupees after 2 years. After 2 years at the rate of 12% per annum. Next one, 50,000. 50,000 into 0.711. You will get 35,550. What is the meaning of this amount? What is the interpretation? Interpretation is important. 35,550 rupees today will become 50,000 rupees after 3 years at the rate of 12% per annum. Okay, now calculate. Less 23,910 plus 35,720. How much here? 95,180. Now what is the cash price under this formula? Cash price is equal to down payment. Down payment is how much? 30,000. Down payment is how much? 30,000 plus present values of present values of all installments. What is the present value of all installments? 95,180. So this will give you 1,25,180. Now look at, so under this method, what is the cash price? 1,25,180. Now look at the Above example, what is the cash price here? 1,25,000 to 20. What is the difference? 1,25,000 to 20. What is the difference? 40 rupees is the difference, and this 40 rupees difference is due to decimals. Okay, here PV factor, present value factor, we have taken round it off. Due to rounding off, this 40 to 40 rupees is the difference. Try to understand, students. Very interesting. Don't be hurry in learning the things, because you are studying CA and CMA, so that you should think, give some time to your mind to think the logic behind this. Is okay? Hope you understood. Right. Now, cash price is okay. Cash price is okay. What about interest? What about interest? For that, do the process of case 1. Here cash price is there, installments are there, and the rate of interest is also there. So you can do the process of case 1 for calculation of interest. So this is by following annuity table. Okay, fine. Now, apart from this, we have another 2 cases. Case 4, when only installments are given, but cash price and rate of interest are not given. Only installment amount given. What about cash price and rate of interest? This time, cash price, no. Rate of interest, also no. Only one thing they have given, installments. Now tell me, with the installments, you can write the installment entry and down payment entry also you can write, but cash price is not given, so that first entry it is not possible to write, and interest entry also not possible to write. At the same time, depreciation entry also not possible to write. This we'll discuss in the next class, case 4. And at the same time, case 5. Sometimes what they can do is, when cash price and the amount of installments are given, cash price, amount of installment given, but rate of interest is not given. That is what? Cash price. Yes, okay, we can write the first entry. Down payment we can write, but interest, it is not possible. Okay, installment, yes, they have given. Depreciation, yes, we can calculate, but here only the factor missing is what? Interest. Only the factor missing is what? Interest. So now tell me, what is the formula for this? Interest is equal to outstanding balance or outstanding amount into rate by 100. Yes or no, students? Interest is equal to outstanding amount into rate by 100. These are total 3 factors. 1, 2, 3. Out of these 3 factors, if we know 2 factors, we can calculate the third one. Suppose if they have given outstanding amount and rate, then we can calculate interest easily. Suppose any one amount is missing, then we can calculate easily. Yes or no? But here, outstanding amount is there, but rate is not given. How can you calculate interest? Try to understand, students. Very, very logical. Okay, outstanding amount given, but rate of interest is not given. If the rate of interest is not given, then how can you calculate? How do you calculate interest? Not possible. So 2 factors missing. 2 factors missing. Actually, practically, you need not to think all these situations, my dear students. Only from the problem sake, examination sake, you should follow these things. Earlier days, there are no computers, but nowadays everything is computerized. Okay, so these are only past days, all these different formats, different cases. But now you cannot find these in the practical. Why? Because everything is computerized. But examination problems, we should follow them only. So I hope you understood this case 5. So this case 4 and case 5 we'll discuss in the next video, students. So I hope you have enjoyed this video, and I think you have got all clarities regarding how to calculate interest portion and how to calculate this cash price with the examples. Okay, first try to understand the basic concept. Don't be in hurry. Okay, here we are about knowledge oriented, not examination oriented. Do remember these things, students. So everything, if you learn everything with the basic background and concept and with some logics, see, all these are presented by human beings only. So we are also human beings. So understand the logic behind this. then automatically you cannot forget the subject. Is it clear? So always try to understand everything with the logic. Hope you understood the concepts. We meet again in the next video. Till then, bye bye everybody. మీరు మా ఛానల్ ఇంకా సబ్స్క్రైబ్ చేసుకోకపోతే సబ్స్క్రైబ్ చేయండి. ఈ వీడియో మీకు నచ్చినట్టయితే లైక్ చేయండి, షేర్ చేయండి, కామెంట్ చేయండి అండ్ ఫర్దర్ అప్డేట్స్ కోసం బెల్ ఐకాన్ క్లిక్ చేయండి. బై బై స్టూడెంట్స్.